Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest news from the D-Street, starting from the benchmark index moves to the sectoral action and all the stocks that are buzzing the most in trade. A lot of stocks reacting to the Q4 numbers and some of them are also at their 52-week high. Some at multi-year highs as well. What should be your strategy on all of these stocks after the Q4 earnings? That's what will be our focus on the show as well. But first up, a quick check on how the markets are doing. Well, for sure, no Monday blues at this point in time for the markets because the Nifty has crossed over 18,400 mark after a long time. 100 points up in trade, 0.5% up for this index. The Sensex 2 is comfortably sitting about 380 points higher in trade at 62,413, up by 0.6% odd as well. So strong cues coming in. Broader market supporting the indices. We're also seeing most of the sectoral indices really up in the green, barring slight losses. Some muted trade in the pharma space. Rest all of the sectors are actually up and about. You're actually seeing the Nifty Realty pack really leading and surging from the front and the rest of the sectors really following. These are the top Nifty gainers on your screen. Tata Motors, Hero Moto, Tech Mahindra. You do see some of the auto names right up there in the top gear. Coal India, HULITC, some FMCG stocks really taking the lead from the front as well. Infosys also inching higher at 1263. Eicher Motors also continues its upward run. L&T has recovered 1.2% up in trade as well in today's trading action as well. On the flip side, Cipla post numbers down by 2.5%. Adani Enterprises seeing some dips as well. Remember, there is an anticipation hearing from the Supreme Court again on the plea that was carried forward from Friday for Monday. So there is some kind of a subdued move on the Adani Group stocks right ahead of all of that action as well. BPCL, Grasim, the other stocks in the losing trade today. But time to welcome our guest on the show. Siddharth Khemka joins in. He's the head of retail research of Motilal Oswal Financial Services. Siddharth, good morning and thank you so much for taking the time out for this discussion. First up, a quick check as to how do you feel about the markets starting off on a very, very strong note, the new week right there. Do we really have enough cylinders firing to take these markets to all-time high levels again?
Yeah, very good morning, Sakshi. It's always a pleasure to be on your show. I think the overall undercurrent in the market is pretty strong, be it with the result season that has been almost, you can say, there have been more hits than misses on an aggregate level. The earnings season has been in line with expectation. The FIs have been consistently on a buying spree. And if you look at the key index heavyweights, they have been pretty steady and strong. So while the bank Nifty is just a whiskers away from its life highs, the benchmark index Nifty too is not very far from there. So overall, I think the earnings season has been pretty good and has provided the kind of strength to the market in an otherwise you can say the global mixed cues. Inflation data in India have been very comforting. US data also came in last week. That also kinds of gives a comfort that inflation is finally inching lower, and we are at the in terms of the rate hikes. RBI has already taken a pause. The Fed is likely to take a pause. So overall, I think the market outlook seems to be that the momentum should continue over the next few days.
Absolutely. The momentum likely to continue the next few days. We are inching closer to record high levels as far as the Nifty and the Nifty Bank are concerned. And if the momentum sustains, it could well be very soon that we may actually see those levels getting retested on the markets as well. And of course, one of the key factors is the domestic earnings that have largely come out much better than expected. Most of the stocks have actually given out in line with numbers or better than estimate numbers this time around. So let's kickstart with our discussion on the Q4 numbers that we've just seen over the weekend and from Friday onwards, like after the market hours as well. Tata Motors, that's the stock that definitely comes on top of the radar. We have been discussing this stock even before as well, ahead of the earnings. But now that the earnings have come about, we have seen the stock, the company turning black as well. In Q4, the net profit has come in at 5,400 crore rupees odd compared to a net loss of 1,032 odd crore rupees as well. We've also seen the JLR sales, the volumes right there supporting. The stock has hit a new 52-week high in today's trading session as well, up 4% as well. What would you really say on Tata Motors? I think that stock is wrong. Avenue Supermarts, we should just change it to Tata Motors right there. But the Tata Motors stock is up by 4%.
Yeah. So Sakshi, I think Tata Motors have been now delivering good numbers quarter after quarter. The Q4 results was a strong beat across business segments, and that resulted in a very strong number. So on a overall basis, the consolidated PAT came in at 56 billion, which was much ahead of our expectation at 27 billion.
Hmm.
What was heartening to see is that margins have been improving at JLR front, and the key factor is that the company is now generating free cash flows, and that is going to improve. So last 2 quarters the free cash flows have improved. FY24 we are now expecting JLR to be to generate free cash flows of 2 billion pounds. So that is something I think which is taking a very positive view that the market is taking on. Overall, I think all the cylinders are firing for Tata Motors, be it the domestic CV cycle, which is recovering on the passenger vehicle side, on the India business. The EV penetration as well as the newer models are seeing strong growth, and on the larger segment JLR, the supply side issues have been reducing. So we are getting good supplies from the semiconductors, which are increasing the production. Demand is recovering across US, Europe, China. Raw material prices have come down. That is also aiding margins. So I think overall, I think the company is benefiting from the growth across business segments. We
Hmm.
still have a positive outlook on the stock, and currently we have a target price of 590 on Tata Motors with a buy rating.
Okay, understood that as well. But do you think that is that target still on the conservative side, looking at the kind of bullish comments that we are getting all across, the way the company has steadily improved on its earnings as well?
So I think valuations are catching up definitely after a very long time.
Yeah.
I would not say it's a conservative target, but
Okay.
definitely one can look at even higher upsides. But then that consistent development has to happen. We are still staring at a possible recession in US, Europe, which
Yeah.
could kind of slow down things. So definitely a positive outlook on Tata Motors, but need to gradually look at target prices.
But would you say that Tata Motors is perhaps one of the best plays in the Indian auto story if one has to really go ahead and grab that stock just to bet on the auto story in India?
I would say that Tata Motors is our preferred picks within the Indian OEMs. That is
Hmm.
something that we have been liking. It's a
Yeah.
play on the CV cycle, which is recovering, plus the global JLR, which has been improving.
Sure. Understood that. So Tata Motors definitely zooming ahead as we speak. Tata Motors DVR up by 4% odd as well. So Tata Motors also up by about 3 odd percent after those strong numbers in Q4. Another stock from another basket or sector is DLF that also came out with its Q4 earnings, and the stock also has hit a 52-week high as well after the earnings as well. We have been seeing the kind of buoyancy in the at least retail sales of luxury homes is concerned, luxury retail space is concerned for a lot of real estate players, and now the earnings are reflecting that as well. DLF reported a 41% rise in consolidated net profit to 570 odd crore rupees in March 2023 crores, as against a 405 crores in the same period last year. In fact, we also see that when we talk about the revenues, however, fell by about 6 odd percent. The board has recommended a dividend of 4 rupees odd as well. On a sequential basis, we saw the net profit jump about 10 odd percent as well. The company has said going forward, or as far as the dividend payment annual general meeting is concerned, that will be intimated in due course as well. But DLF earnings, what do you have to say? The stock is really shooting up, and how? 6.3% as I speak at the day's high, and of course at 52-week high levels as well. 463 for DLF today. Siddharth, your comments? All right, we'll just try. I
The
think there is a
overall
technical glitch. Siddharth, if you can hear me, DLF, that's the stock that we are discussing from the Realty Pack. Very strong numbers coming in, and the stock has reacted very sharply as well, about 6.3% odd in today's trading action as well. We've seen it's a very stellar number when we talk about the net profit numbers. Operating profit or EBITDA also has climbed 8% as well. We've also seen the company has also announced a dividend as well. Siddharth, what about you? DLF, the earnings that have come about, how have you analyzed?
yeah. Hope I'm audible now, Sakshi.
Yes, I can hear you very clearly. Yes.
Yeah. Yeah. So I was talking about the entire real estate pack. We have seen very strong numbers from the entire real estate pack. The pre-sales data has been pretty strong. Some of them have reported record pre-sales data, and DLF has neither disappointed. They have continued to show strong pre-sales run rate, which we
Yeah.
believe should sustain in FY24 as well, given their huge pipeline. That on the residential sales side, I think the pipeline is pretty strong. The company has given strong guidance.
Mm-hmm.
On the rental business also, the performance has been pretty good. The footfalls in the malls have improved. The sales have gone up, and hence their collections have also increased. So I think overall. We believe that the company can match its FY23 run rate and deliver another strong pre-sales. They have a new pipeline of about 11 million square feet across luxury as well as
Yeah.
value segment,
Yeah.
and hence we believe that the cash flows would also improve, resulting in a good steady growth in DLF numbers.
Okay, and the target that you are using on now you have on DLF, I think the earlier target you had was of 415, and then you had perhaps revised it to 440 odd. The stock is now up at 460. Would you be revising it now further?
So we are looking at the target price. We post the results. We have revised it upwards to 440. However, we see that the stock having run up and the gradual increase in the pre-sales run rate, we could definitely look at revising. But right now, we are sticking with our target of 440.
Okay.
We are also having a neutral rating, which is basically purely on in terms of valuation. Otherwise, as I said, we are liking the business, the growth story in DLF. But in terms of valuation, there is not much room upside left compared to some of the other real estate players where we feel that the valuation and uptick would be there higher.
Okay, understood that as well. So that's as far as Tata Motors and DLF, two strong numbers, and the way brokerage houses are really approaching these two stocks after these stellar numbers. But another one of the favorite stocks of the D Street and most of the analysts is DMart, but that has been continuously dropping as far as the share prices are also concerned, and the earnings have come out disappointed as well. In fact, DMart shares fell about 5% in the intraday levels today, second day in a row. They missed estimates for sure. We did see a margin drop as well, a Q4 profit miss as well. And of course, there are rising concerns of the intense competition that may rise from Reliance Industries, that has a tendency to offer a lot of discounts on everything from pulses to clothes. I wanted to understand from you the way we have seen DMart really create wealth for investors, one of the rarest stocks that has been able to create such massive wealth over a period of time for investors. But are things changing? Has it run its course as well? What do you read into the earnings, and what would you advise investors to do now?
Yes, actually, I think what you're saying is what the market is also looking at after having delivered quarter after quarter strong growth. Now, on a high base, the growth has started kind of normalizing, and that is where the valuations are now kind of taking a backseat, and we are seeing the time correction that is happening in the stock. Last 3 years, we have seen that DMart has been adding larger stores. With larger stores, we expect to see improvement in the store productivity, while the previous smaller stores are expected to increase the growth, but their growth gets kind of plateaued. So now they are shifting the business model, which will take some time to come back to on the overall growth prospects. Results have been not pretty good, as I said, a pretty decent number. Uh, what we saw is that DMart has been seeing a footprint-led growth of 20% in the last 3 years, and the same store sales growth has been pretty subdued, mainly being impacted by the addition of bigger stores as well as the weak discretionary demand. So after the 30% correction from its peak, I think the stock continues to trade at about 60 times FY25 P, and that is where we see that the company could continue to remain sideways for some more time. We have a target price of about 3,900, and we have a neutral rating on the stock.
Okay, understood that. Well, thank you so much, Siddharth, for being with us on the show and discussing all these various stocks that have reported their numbers and reacted sharply to their numbers as well. The best approach that investors should have post the earnings on these particular stocks and the overall market scenario as well. Many thanks for being with us. Right now, the market's definitely inching higher. 445 points up for the Sensex right now. It's now up by 0.7% at the day's high level for sure. 18,434. Currently for the Nifty as well, it's up by 120 odd points. So the markets are picking up pace. Will we continue to see this bounce and this sharp upside towards the end of the session as well, or will markets again witness some kind of profit booking? That's the big question. Now we will keep an eye on the markets and every movement in the markets as well, and you can track the same by being with us on Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Until then, thanks for tuning in.
Starting next year, these bunk beds will be